we are going to learn the journal entries. So let us take the first transaction. 2016 January 1st, Ahmad started business with rupees 5 lakhs. Ahmad started business with rupees 5 lakhs. See here, in order to write the journal entry, we must remember three things. The first thing, we have to understand this transaction, this business activity. And the second thing, we have to identify the accounts. Okay? And once the accounts are identified, we have to apply the rules for debit and credit. Now here, Ahmad started business with rupees 5 lakhs. Okay? Ahmad is investing rupees 5 lakhs in business. So Ahmad comes under personal account. And rupees 5 lakhs cash, this comes under real account. Okay? Now here Ahmad is the giver. So personal account rule, debit the receiver, credit the giver. So this Ahmad we have to credit. The next, rupees 5 lakhs. Now rupees 5 lakhs is coming into the business. Okay? Ahmad is investing rupees 5 lakhs in business. So that rupees 5 lakhs is his capital in the business. So here, as rupees 5 lakhs are coming into the business, 2016 January 1st, cash account debit, okay, 5 lakhs to Ahmad's capital account. Ahmad's capital account. We have studied business entity concept where owner is separate from business. Owner is providing capital to the business. So capital is a liability to the business. Okay, capital is a liability to the business. That is why we are crediting capital. Okay. So here, simply we can't write here Ahmad here. Okay, if we are writing here simply to Ahmad, it means we are getting amount from Ahmad, not for business activity. It may be treated as a borrowing. If we are writing what you call to Ahmad's capital account, it means Ahmad is providing 5 lakhs capital for the business activity. Okay? So here being business started. Okay? The next one, on January 3rd, purchased goods from rupees 10,000. Ahmad purchased goods worth rupees 10,000 from Mukhtar. Okay, so here we are having one is goods account, one is Mukhtar account. So this is a credit transaction because there is no clarity about cash, and name of the what do you call creditor is also given. Goods comes under real account. Okay, real account rule, debit what comes in, credit what goes out. So the goods are coming into the business, so we have to debit goods. Okay, so when we are debiting goods, so we are having what you call credit remaining. So Mukhtar is to be credited. See, personal account Mukhtar comes under. Personal account rule, debit the receiver, credit the giver. Personal account rule, debit the receiver, credit the giver. Mukhtar is the giver. So credit. Now here January 3rd, goods account debit 10,000, and here to Mukhtar's account 10,000. So we are receiving goods of 10,000 and rupees 10,000 is due to Mukhtar. Okay. Now here being goods purchased on credit. This is the narration. Okay. And here we are not using this LF column. LF means ledger folio. So after writing the journal entries, when we are transferring this journal entry to individual ledger accounts, so we are writing the page number here. Okay. So ledger folio. So this transaction, this entry is available in ledger at what page? So we are writing that number. So presently we are not using this. Okay. It is part of format. Purchased machinery and paid by check rupees 50,000. Okay. On January 5th, purchased a machinery and paid by check, not cash. So whenever check is issued, the payment is made by bank. Okay, na? When we are issuing a check, when the payment is made by check or by debit card or credit card or net banking or what do you call Phone Pay or Google Pay or Paytm. So what is happening? When we are using any instrument for payment, when you are using any app, so the amount is what you call deducted from bank. So it means bank is making the payment. So here machinery is asset, it comes under real account. Real account rule, debit what comes in. So we are debiting machinery. And here bank, it is an organization. So it comes under personal account. So personal account rule, debit the receiver, credit the giver. So bank is the giver. So here we are crediting. So January 5th, machinery account debit 50,000 to bank account 50,000. Okay. Sometimes name of the bank will be given. SBI, Axis Bank, Bank of Baroda. So we have to write the bank name. Okay. Why we are crediting bank here? Because here payer is bank. We have to credit bank because the payment is made by bank. The amount is deducted from our bank account. So we are not paying cash here. Okay. So here being machinery purchase, being machinery purchase. Simply add being to this what we call transaction. Okay. So what we call this? We call this as narration. Paid salaries rupees 20,000. Paid salaries. Now here salaries paid to office staff for taking their services. So this is expenditure. So expenditure comes under nominal account. And here rupees 20,000. This is cash. Cash comes under real account. Okay, nominal account rule, debit all expenses and losses. Okay, when we are paying salaries, so cash is going out of the business. So great. Now here, let's take here January 10. So January 10, salaries account debit to cash account. So 20,000 salary and 20,000 cash is going out from the business. Okay. Why we are writing here two times amount? One is debit amount, means 20,000 salary expenditure we have incurred. We have paid rupees 20,000. Now here narration being salaries paid. Being salaries paid. Next transaction is January 17. Amount deposited in bank, rupees 50,000. Okay. The owner has deposited 50,000 in bank account. So what does it mean? One is bank account, this is personal account, and rupees 50,000 means cash. So this is real account. Personal account rule, debit the receiver, credit the receiver. So when we are depositing amount, the amount is going to bank. Bank is the receiver. So debit, as the cash is going out, credit. Okay. So here on 17, so bank on debit to cash account. Amount 50,000. Okay. We are debiting bank account because bank is the receiver. We are crediting cash because the cash is going out from the business. So here being amount deposited. Okay, or you can write in bank. Okay, goods sold to Arun for rupees 10,000. We have sold goods worth rupees 10,000 to Arun. So goods account is a real account. Arun account is personal. So this is a credit transaction. Credit transaction. Now here real account rule, debit what comes in, credit what goes out, goods are going out, so credit. Personal account rule, debit the receiver, credit the giver. Arun is the receiver, so debit. Now here January 19th, Arun account debit to goods account. Arun account debit to goods account 10,000. So here being goods sold on credit, or you can write being goods sold, or you can also write being goods sold to Anand. See, whatever is there in the transaction, we are forming a meaningful sentence, we are writing here. Okay, in a reported manner. And 20, paid rent by check. Paid rent by check, 5,000. Rent is expenditure, it is paid by check. So rent is expenditure, comes under nominal account. Check means when we are paying check, the amount is paid by the bank. The amount is paid by bank. Now here, nominal account rule, debit all expenses and losses. So we are going to debit this rent. Okay. Then bank comes under personal account because bank is an organization. It is a firm. Okay. Now, here bank is paying that rent. We are issuing a check. So the here payment is made by bank. So debit the receiver, credit the giver. So here the giver rupees 5,000 for rent is bank. So credit. Now here 20 rent account debit to bank account. Okay, here you can write being rent paid. Okay, you can also write being rent paid by check. So the amount is 5,000 debit, 5,000 credit. Okay, next one. On January 27, paid electricity bill rupees 7,000. Electricity bill is an expenditure, so this comes under nominal account, and rupees 7,000 this comes under real account. It is cash. Now here nominal account rule, debit all expenses and losses. So we are going to debit electricity bill, and the cash is going out. We are going to credit this. Okay. So January 27, here electricity, okay, bill, or you can write electricity expenses account. Okay, account to cash account. Okay, 7,000. Here being electricity bill paid. Okay. See, sometimes we pay electricity bill by what you call check, or we pay it by what you call phone pay or Google Pay or Paytm. Sometimes we are using what you call net banking. So in all that cases, we are not paying cash. The amount is debited from the bank account. So at that time we will be writing bank here. So let us stop here.